Okay, welcome to the Swing Trading with Cycles channel. It's November 11th. It's Friday. It's about 3 p.m. I'm able to do this video it's better for my schedule to do this during the trading day today. So obviously the candle's going to change a little bit, like the weekly candle, for instance, or even the daily, or the daily especially, and maybe even the weekly. But we'll take a look at the different indices. So we'll start with the S&P 500. And as we labeled in the last video, we had this little swing low on day 15, right? Then we came up and we had, this was our sort of ugly day, Tuesday, where we had we made a lower low. And then Thursday, we came in and because of the CPI number, had a massive gap up, right? So that was really hard to stay, think about that for a second. We closed here, right? Because I was about to, and I'll get rid of this line here. I want to make sure that this is clear, right? Because it's important the way how things work. The candle closed here, right? So you opened here and then you just dropped all the way down here. So you closed in the 37.49 area. And then it opened at 38.59, 100-point gap. And I have a video, I guess it was yesterday morning where, the days are going by quickly, where we go through that, maybe 15 minutes after the actual number, and you can see the 1 minute candle that has the 100 point, that does the 100-point move. So you have this crazy gap because the number comes out at 8:30, and this is the S&P cash, doesn't trade after hours at all. And so you kind of have this massive gap, right? And so does this thing get filled at some point on the way back? That's an important question, especially, and I think that's a bigger question. We'll think about that. But as we think about what this means for the daily cycle, that was day 15. This is 16, 17, 18, 19, 20, 21 now, right? So, and this is another thing just for keeping track here. We're keeping track of a cycle in real time, but you only get real clarity about what the count was in hindsight. Sometimes it's more clear in real time, but it could have been the case that this is going to roll over and become left translated, for instance, right? But now we know we had a higher high for the cycle, and this day 13 is not our high, right? It's still a high, right? If once a swing high, always a swing high. It's just now not significant anymore, or not as significant, because we've now made a higher high in the daily cycle. So this is now day 21. So we're getting a little bit later in the daily cycle, and that previous swing high is going to be an important level you're going to want to watch, because we could come to back test that area. It's like the 39.11 area easily. The other level to be aware of that we've talked about in previous videos is this previous gap down, right? So gaps tend to get filled both on the upside and the downside. So we did have this gap down, and this ironically was from a CPI number. So the same kind of idea, and actually, technically this gap down was from there to there, right? Because that's where we closed. So it's funny. This is literally the pattern we talked about at the beginning, this pattern in reverse, literally exactly the same thing. This is uber bullish. You close near the highs, and then you come in and you gap down, and then you just have follow through, right? And so depends on how you want to think about it. Either way, these things are zones, right? And so call it a gap between 40.38 and 40.81. So not nearly as large as this gap, for sure, but we're probably going to cross that, right? And if anything, that gives you at least a near-term target of 40.81. Right? Although I think there's another kind of level that you want to think about on the weekly chart. That's why multiple time frame analysis is so important, and the monthly chart for that matter. But this gap is important to note above. That just gives you further indication that we have more upside to go. And really, we're going to want to test this swing high, right? This day 4 daily cycle high. So this was a really bearish daily cycle, topped out on day 4, bottomed on day 27. That means a 4-day rally, a 23-day decline. That's really bearish. So far, we've had a 21-day rally. Now it's a question of how long is the decline going to be and when is it going to start, right? My guess is we at least get through this gap before we get this decline into the daily cycle low. And then from there, we're going to have to see how mild it is, how long it lasts, etc. And also note that this yellow line here is the 200-day moving average. So anytime you see this on any one of my charts, it's the 200 period moving average. So whatever chart, if it's the weekly, then it's the 200 week moving average. And this is moving lower, so it's going to come to meet price. So at some point, we're going to have some interaction with it. And you imagine we maybe cross above it. So I think all of this is going to kind of coincide around similar levels. So that's the daily chart. Very important to make note of. We're getting later in the daily cycle. That's important to know. And on the weekly chart, we had a high on week 3, which is no longer our high. The same way we've made a new high on the daily cycle, we've now made a new high on the weekly cycle, which is very positive. That is week 4, right? 1, 2, 3, 4. Now, that's positive because we want to have a right translated weekly cycle. We want a weekly cycle that has a long rally, that has a rally that's longer than its decline. So like that daily cycle I just talked about where we rallied for 4 days and declined for 23, you could have the same equivalent of that happen on a weekly, right? Like imagine that actually, right? That this week is the high on week 4 and then we just decline for, 23 weeks from that into a week 27 low. I'm not saying that's what's going to happen, but like that would be a really bearish, what's called left translated cycle. And so what we want to see is, are we going to get something that's more right translated, that's going to rally 15 weeks maybe, for instance. This previous weekly cycle that bottomed on the week of October 10th, rallied for 9 weeks. And that was a bearish weekly cycle because it rallied for 9 weeks and then it declined for, 7 weeks. Oh, actually, 8 weeks. So it actually didn't decline for longer than it rallied, but it did make a new low, which means it gave the whole rally back. So there are two elements of bearishness, right? There's the length of the decline, but also the magnitude of the decline. If the decline takes away the entire rally, which is to say it makes a lower low, then that's obviously bearish no matter how long it lasts because you've wiped out all the progress. That's really important, right? Like this is a great example. This was a tiny little feeble rally that lasted for 5 weeks. And then this decline lasted for 11 weeks. But more importantly, we took out this whole rally in like 3 weeks, right? And then we just continued to decline even more. So that's important, like taking out that low. So let's see how much more upside we have from here. And if we look at the monthly chart, remember we're thinking about where we are in the... Sorry, this is actually the quarterly. I'm gonna pull this back to the monthly. So we're on month 32 of what we suspect is a 3-year cycle. So that we would expect that the 3-year cycle low would come around month 36. But things happen, right? Things can happen sooner. The high we do know for sure was month 22. And so we've been declining, and that was January. This is the S&P. So we've been declining since month 22, so basically all of this year. But we now have the possibility that this month of October, this candle I'm hovering over right now, is our 3-year cycle low. Possible, right? Possible. It's all about probabilities. Why is that possible? Well, because of the swing low we have right here, right? You can see we went above the high from this candle that marks the low, and that's a high at 39.05, right? We're well above that right now. And so as long as we can close the month above 39.05.42, that means October is potentially our long-term cycle low on month 31, right? And that would mean that this is month... I'm just going to draw this here just for reference. Like that's how that would look, right? And that would be month 1, right? So in the same way that this cycle rallied for 22 months, we'll have to see how many months this will rally. But that's the point. You want to get in early. You want to be able to enjoy a just robust, long daily cycle advance. And so you're able to do that by looking at multiple time frames. And the monthly is probably the most important because that's going to give you the longest sort of rally, the most margin of safety, if you will. And so that's important. And if we zoom out even further and look at the quarterly chart, we're gonna need a quarterly swing low, and so that would be a move above the high from last quarter, which is 43.25.28. Now, that definitely feels like it's a really long way from here. I mean, because it is. It's obviously more than 300 points, well over 300 points. But if we can get through 4,200, as you know, as markets do, they tend to undershoot and overshoot. You could see a world where we overshoot to something like 4,300, and that's even in the scenario where it's bearish, right? Like you can imagine, you know, if we think about, you know, a potential, you know, trend here, right? Like we did this, so we did this, and then we did that, and then we did this. We could even do something like that, and then do that, right? And I'm not drawing the precise timing. Like that could be our 3-year cycle low, for instance. But it's also possible that this is our 3-year cycle low. That said, if it is our 3-year cycle low, we need to go above 43.1766, and we're going to need to close above that on a quarterly chart. So that would be the end of this year. And if we can't do that, then we're going to need to do that next quarter. So, you know, the end of, call it March 2023. And that's the whole point. This is the long term, right? And so we're gonna have to have some patience. We've already been declining, right, for like 9 months, and so, or 11 months, call it, and the Nasdaq's been declining even longer. But the levels are really clear. That's the really exciting thing, that we're gonna have some real clarity soon. And so let's look at QQQ. Same kind of idea. The levels are different, but the Qs are definitely weaker. That's important. So for the Qs, 16, 17, 18, 19, 20, 21. So also day 21, but notice we just barely made it above that high from day 8. And so they ran out of gas early and also just barely made a higher high. So all that to say, this is not the horse I would ride to the upside, the Qs. Not at all. And on the weekly chart, 1, 2, 3, 4. Same deal. We've made a new high on the weekly at week 4, so that's promising. And for the monthly, also month 32, also working on a little swing low. So, and I say month 32, but really it could be month 1. Last month could have been the end of the, you know, the longer term cycle. And there's no, I mean, it ending early is totally fine. There's nothing sort of mystical or magical why it has to be 36 months by any means. And if we look at IWM, the small caps, same deal. Day 21 also made a higher high, but just barely, and it's also reversing. That doesn't look. That's not what you want to see, generally speaking. So again, it feels like the pure play here is the S&P itself, as opposed to any of the other kind of ancillary indices, but it is the same pattern for all of them, that they have managed to make a higher high on the weekly as well. And I will finally look at the Dow. The Dow, that has actually been a little bit more bullish. So that's interesting. The Dow actually, right, because the Dow had made higher highs. It's in a much stronger uptrend, but it's actually kind of green today, or excuse me, red. So that was day 14, 15, 16, 17. Right, so also day 21. That's interesting. And again, same pattern. Wait, 1, 2, 3, 4. Yep, new high on the weekly. And for the Dow, I think for the Dow is actually much closer to a quarterly swing low, right? So then this is the DIA. It's an ETF that tracks the Dow. If we make a move above 340, 347, that would give us a swing low for the quarterly chart, which is a really important bottoming signal that has to happen for the 3-year cycle low. That's a requirement, because that's how price makes a long-term bottom. You've got to make a swing low on a really long-term time frame. So that's an important door that we're going to need to get through. So that's going to be, so that gives us really clear levels to watch for the broader markets. And again, we know that the Dixie is showing some major weakness now, possibly has topped in its 3-year cycle. So that's going to give you fuel to the rally, this rally in the markets. But watch your risk because we are getting later in the daily cycle. So that's important. So that's all we have. Thanks for watching.